Question of the day, what are closing costs? So if you're buying a home in Maryland, don't just plan for your down payment. You do have other fees. So let's talk about what closing costs actually look like. In Carroll County, buyers typically pay about 3 to 4% of the purchase price in total closing cost. This may vary depending on the county. So let's say you're buying in Howard or Montgomery County where the taxes are higher. You can expect that number to be slightly higher. And let's use a realistic example. Let's say you're buying a $400,000 home. You can use a rough estimate of approximately $12,000 to $16,000 for your total closing costs. However, that will vary depending on loan programs and other things such as that. Now, here's exactly where that money goes. Let's break it down. Transfer and recordation taxes. This is the largest local piece. In Carroll County, you have a Carroll County transfer tax of 1%, and then a Maryland state transfer tax, which applies to all properties, which is a 0.5%. There's also a recordation tax, which is broken down to like $6 per every $1,000 of a loan amount. But typically, the transfer taxes are often split between the buyer and the seller, unless you have something in your contract that says otherwise. The recordation tax is usually paid by the buyer. So on a $400,000 purchase, you can plan on about 3/4 to 1% of the purchase price. First-time home buyers may qualify for reduced transfer taxes, so you want to speak to your agent and make sure that that box is checked on page 10 of the Maryland contract. Next, lender fees. These can vary widely. There are mortgage company fees, and this is charges that they charge you for origination, underwriting, processing, appraisal, those types of things. These are going to vary by the lender and the loan type, so you want to reach out to the lender to compare your fees. In addition, take note, most lenders that you pay for an appraisal for, they ask for that on the front end prior to settlement. You can also normally pay more money for what we call points. This is basically money you pay based on a percentage of the purchase price to bring down the interest rate on your loan, thereby giving you lower monthly payments. Again, reach out to your lenders so they can break it down for you and see what is right for you. Next up is the title and settlement fees. So the title company is who is going to sit down at that table and give you the keys alongside of myself. This covers things such as the title search, the title insurance, settlement and closing attorney, recording fees. So I'd estimate approximately $2,000 to $3,500 depending on the price of the property, but I was kind of using a $400,000 number. Lender's title insurance is required for all loans, and there is an additional title insurance that protects you as the owner for as long as you own the property, which I highly recommend. Now let's talk about prepaids and escrow. This is not a fee. It's a future bill basically that's collected up front that the lender pays out of your payment you make each month. This includes things such as a year's worth of homeowner's insurance, 2 to 6 months of property taxes. That varies depending on the lender and what month you actually close in, prepaid interest for that month, and possibly your mortgage insurance. The typical range, probably somewhere between $3,000 to $7,000 on a $400,000 property. And property taxes are lower here in Carroll as opposed to some of the other counties, so that's going to help. Let's recap. So realistically, your total example on a $400,000 home is roughly $12,000 to $16,000, depending on taxes, insurance, and whether or not your home is in an HOA. That's why I tell buyers to prepare for that 3 to 4% of the purchase price here. So the biggest mistake Carroll County buyers make is thinking closing costs are random. They're not. Everyone pays them. They're predictable once you understand the local taxes and the rural property requirements. So if you're buying here, I can break down exact numbers based on your price point and loan type. And as always, stay smart, stay patient, and stay educated.